Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend, wie geht's? For those of you who are new to us, we are the TSTW, soit S008 traders, and our website is www.stochastic-macd.com. For all trade, we use the 5% money management rules and apply stop loss in all trade. And this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW, soit S008 traders. The title of this video is how to swing trade using the Fibonacci Gartley pattern. Alright, a lot of traders know what is a Gartley pattern, but few traders understand how to use the Gartley pattern or how does the Gartley pattern formed. In this video, I will explain to you the psychology of the Gartley pattern and how one can swing trade successfully using this powerful Fibonacci pattern. All right. Today is the 10th of November 2013, and the time in London is 2 minutes past 3 p.m. In New York, 2 minutes past 10 a.m. What is a Gartley pattern? I will refer traders back to our website, www.dayprotrader.com, and they can know what is a Gartley pattern, all right? And also to our YouTube channel, www.youtube.com/dayprotraders. Check that channel, subscribe to that channel if you want to master Fibonacci pattern, okay? So the Gartley pattern, now what is generally taught on the web, that I've seen many times, except one key element that I'm going to mention to you, is that the Gartley pattern is this. A lot of traders know that. So price went down, okay. Then the price pulled back to this must be exact, 61.8%. According to harmonic trading, price might return back exactly to the level of 61.8%. All right. And then the price will pull back between 38.2 and 88.6% of the A to B. That's why I refer you to our YouTube channels. All right, Day Pro Traders YouTube. Okay, so then the price goes up, to the level of let me draw it again. So price went down first and then pulled back to the 61.8. This is the, you see where my line is, this 61.8 of what we call XA. This point is called X for X-ray. This point here is called for A for alpha. And price will pull back to a B, which is at 61.8% of the XA. This point here is B. It's at 61.8% of the XA right here. All right. And then the price will move from C for Charlie. Okay, the C is between 38.2 and 88.6% of the A to B. All right. Then the price will pull up, again, up to the zone of 78.6% Fibonacci retracement level of the XA. Right here. This is X, this is A. And price will go up again from this point. Okay. The C to D will end up at 78.6% of the SA. 78, I put exactly 78%. I don't use 78.6, I prefer 78%. It makes sense to me, all right? Okay, this is the Gartley pattern. Let me remove my Fibonacci drawing. Pay attention carefully. Now, this Fibonacci pattern will be completed here. So when we see the pattern here, we will see that the Fibonacci pattern is completed right here. This is a Gartley pattern, all right? So this is a bearish Gartley pattern, where I put the green spotlight. Trader will look for opportunity to sell, provided that they receive a signal to sell. But there is one important element that was not discussed on the web prior, which I'm telling you now, that you must know now. Prior to the SA, we must have a bullish trend right here. price should have gone up for a while, and the SA must be a profit taking and should not cancel the prior bullish, okay, progression. This is from dayprotrader.com. You will not see on the internet anyone tell you this condition about the Gartley pattern. All right, we are proud of it, okay? So remember that, okay? Prior to the XA, because traders use this pattern on the hourly chart, 2-hour chart, 4-hour chart. But one thing that traders tend to forget and get into trouble sometimes is that prior to the XA, the one that are drawn because we are talking about bearish Gartley pattern, we must have a bullish move, and the XA must not cancel, which means must not be a total retracement, okay, of the prior, okay, a bullish move must not come back to the starting point, okay, it should not be at the circle point. It's very important condition for the Gartley pattern. It makes sense? Don't forget that. Don't forget it. Okay, don't forget it. Don't use the Gartley pattern like a science or anyhow, all right? That's what I'm saying to you at the beginning of this video. So when we are talking about, okay, a bullish Gartley pattern, now I'm doing another drawing on my chart. Okay, pay attention carefully. Okay, that's why I'm referring you to www.youtube.com/dayprotrader.com to understand the anatomy of the Gartley pattern. Okay, now the bullish Gartley pattern will be completed right here, where I put my green spot here. And on our YouTube channel, I explain to traders how to quickly spot this pattern. All right, you don't even need a software to find it. You can quickly spot it, and I talk about it on our channel. Okay. Though there are software which you can use, I'm not denying that you can use it, okay? There are software that people are selling that you can use to detect Fibonacci pattern, but you can quickly detect them, okay? For the bullish Gartley pattern, the pattern will be completed when I put my green spotlight here. So this point, that's what we call the X, is point A, B, C, D. All right, X, A, B, C, D. The bullish Gartley pattern will be completed where my, okay, I put the green spotlight here. So the A to B should be exactly 61.8% of XA. The B to C should be between 38.6% and 88.6% of the AB. And the C to D should be completed at 78.6% of XA. Should come down, okay? All right. All right, let's do it properly. If I put here, for instance, Fibonacci retracement level, okay, price went up, okay, to this level. The 78.6% is somewhere here. I need to adjust this one to 61.8, all right? And the C to D should end up at 78.6% Fibonacci retracement level of the SA. I'm going to remove my Fibonacci drawing. This is a bullish Gartley pattern. Now the question that we're going to answer in this video is how do we use the pattern for swing trading? All right. Now you remember also at the beginning of the video I was saying to you, many traders know about the Gartley pattern, but few understand the Gartley pattern. That's why I'm going through this process now to assist you to understand the pattern. Again, prior to validate the bullish Gartley pattern, we must have, okay, a bearish move, okay. Price must be going down before we have the XA. Remember, the SA portion of the Gartley pattern is a profit taken and should not be 100% retracement of the prior bearish move. So the price was going down fast, there was a bearish trend, and then there was a profit taking that we call XA, and then we see another pullback which we call A to B, and then we see price rallying up a little bit what we call B to C, and then come back down again to the delta zone that we call is a conversion point. This point also is a conversion point. that we call, okay, the delta zone, okay, C to D, and it has 78.6%. This is the Gartley pattern. Apart from everything else that has been discussed on the internet, on the YouTube, or Facebook, or anywhere on the internet, one thing was missing is that prior to the bullish Gartley pattern, we must have a bearish trend, and the SA of the Gartley pattern, of the bullish Gartley pattern, should not be 100% retracement of the prior bearish move. On the other hand, when we are dealing with, okay, a bearish Gartley pattern, this one here, all right, the XA must not be 100% retracement level of the prior, okay, bullish move. All right, you all right? You get it? Note it down. Don't forget it. Because what we have seen, trader will go on the chart and they will start looking for this pattern. They will not pay attention to the prior move. So they just go like this. Okay, you see all the time like this. And at some time, traders get into trouble because they don't understand what has happened, what is taking place. What is taking place for a Gartley pattern is a profit taking. So there was a trend that was in place, and we can say that the Gartley pattern is a kind of correction. I don't want to talk about Elliott wave. We are talking about Gartley pattern. So it's a kind of correction taking place. But correction to what? People looking for Gartley pattern anywhere, but the Gartley pattern is a kind of correction. All right? So why is the Gartley pattern correcting? So the prior trend, do not forget them, all right? The prior trend. And for swing trading purposes, ladies and gentlemen, the Gartley pattern, once the price hits the 61.8 and pull back here, of this point that we call C for Charlie, this is where a lot of swing traders look for opportunity, okay, to buy. Now, because this is a bearish Gartley pattern, so when the bearish Gartley pattern is developing, it's not yet completed, it's being formed. Remember, it's not yet completed when it reaches the point C. When we see the harmonic Fibonacci ratio, 61.8, pull back between 38.2% and 88.6% of the A to B. Now, where the problem is starting, for swing trading purposes, I will explain it to you now, okay? So you see the point C here, so the price changing direction here. Why do you need to look for? Very often what we see, trader will place a trade to buy, or they will place a trade to sell, all right? Now, these are aggressive traders or some traders that do not understand what is taking place. So the price changing here, all right? Suppose you were here. We're going to look at the chart, don't worry, okay? But this exercise is very important, okay? So the prior range you see, you are here, you see, George, I have identified, okay, a bearish Gartley pattern that is developing. It's not yet formed, but I'm looking for opportunity to buy at the point C. So you want to buy, what do you pay attention to? You pay attention to your left-hand side. Is he a valid support level? All right? Is he a valid support level? All right? Can I look for opportunity to buy there? What the price did at that point in time in the past? Am I buying at support level? So trader will buy because the price range is changing direction. No. Sometimes while it is happening, pay attention, you may see that below that where the price changing direction, there is another better support level. So trader will start buying here. Okay, nothing wrong with that. Nothing wrong with that. It may work, it may not work. But then, very often what we have seen, the price will come down more again. Price will pretend to go up a little bit, and then slowly will pull back again down to the better support level, violating, okay, the theory a little bit, all right, so to speak, and before returning back above the previous support level. And then the move will continue to the upside. Watch it. All right? So when a bearish Gartley pattern is developing, is being formed, we can look for opportunity to buy at the point C, provided that the point C is a valid support level. When we want to buy at the point C during the formation of a bearish Gartley pattern, all right, because the pattern is not completed yet, so it's not completely bearish, it's being formed, all right, you will be bearish at the point D for delta. I'll come back to that, all right. For a low risk entry point, the point C is an excellent place for bulls to buy, though it's a bearish formation that is being developed. It's not yet completed. We can look for opportunity to buy at the point C, provided that the point C is a valid support level. Now, if you want to buy, okay, you will check the fundamental, okay, you use the trading triangle, you check the market environment, and before you will place the trade, you will use a multiple time frame trading method. All right. If you want to buy and hold, well, check, okay, the current liability, okay, all right, and the current asset at least. What's happening to that stock? Are they making money? All right. What is the management? What is the future? What are their competitors? Are they coping with the competition? Okay. What's their products? Is their product being obsolete now? Okay. So you want to check all this so you and buy the correct stock or the correct financial instrument. Now, when a bullish Gartley pattern is being formed, it's not yet completed, we can look for opportunity to sell at the point C for Charlie right here. So we see that, okay, we see that there was a prior bearish move, and then we see a profit taking that did not cancel the prior bearish move. Okay, prior pullback to 61.8. The first thing that is coming to our mind is Gartley pattern. The second thing that is coming to our mind is the crab pattern. All right. Now price going up. Okay. Price couldn't reach the point A. Stop between 38.2% and 61.8%. We do not force it. We watch it carefully. Again, at the point C here, we are looking for the better support level. In fact, the point A is a better support level, but we want to watch it carefully. All right. If the fundamentals are weak, if the market is bearish, the price will have a lot of problem to reach, okay, at this level. This strategy is powerful, especially if the bearish Gartley pattern is developing. And at this point in time, you notice that the company is about to release their earning news. Watch it carefully. You may place a limit order below or the point C here a day before the news is released. And if the news happen to be bearish, you may see that the price will run very fast to the downside as traders spotted the pattern being formed, the bullish Gartley pattern being formed, and the price may give a little bit back before finding the support at the point delta. On the other hand, if we see, okay, a bearish Gartley pattern being formed, and the price approaching the point C for Charlie, for the bearish Gartley pattern, and the company is about to release, okay, earning news or some important news, or there are some development going on in the world, some important news about to be released at that point in time, we are watching this stock. We may place a limit order, which means we are not taking a market order. We are taking a limit order to enter the trade. We place it there in case the price reaches that level, our order will be filled. And or we can wait for, okay, a clear-cut signal and enter the trade at the point C. If the signal fails, just come out. Don't fight it. All right? If we buy at the point C during the formation of a bearish Gartley pattern, the first target is what? This one here. Right here. All right? B for Bravo. That's your first target. All right? The first target. Very often, the market will acknowledge that level. All right? Before continuing the move to the 78.6% level. I haven't finished yet. This discussion is very important. We are just halfway of this discussion, so do not, okay, switch off yet. There are more I'm going to tell you in this video. All right? Most swing traders do not take the trade at a point C because sometimes they don't see the pattern until the pattern is completed. But if you keep your eagle eyes, so to speak, wide open, you are likely to know that the pattern is developing, which I'm going to show you now for this stock, NVIDIA stock. Okay, we're going to look at it, analyze it in real time here, and I'm going to discuss a few things with you. All the things I'm showing you here with my drawing on the chart, we will see with a real chart. Okay. Many swing traders tend to look for opportunity to buy or sell at the point D for delta. Nothing wrong with that. It's a convergent point, all right? So traders know that, okay, Gartley pattern be formed, and they are looking to buy, to sell, okay, the bearish Gartley pattern at the point D, all right? They want to sell. What we have noticed, what the dangerous traders also know, is that they know that when the pattern is completed here, there is a group of traders that will try to buy right there because they know that there are orders being placed, littered by aggressive traders to sell. Maybe there was no valid reason to sell, but these people place order there to sell. What's happened when we have accumulation of orders in one place? These orders must be filled by market makers. So the price will go and fill these orders. Price will pretend, okay, will be filled. The order will be filled, but what the price will do, the price will not go down. The price will go up. But to avoid that mistake, one must always combine the technical and the fundamental and use the trading triangle. Nothing is wrong with that. So price reaches the point D. It's a convergent point. It's interesting for us. All we do, we can just highlight it, okay? We can just highlight it, okay? Say, okay, maybe it's a Gartley pattern, all right? Why we say maybe? Because there's another pattern that gets into trouble. So there's another Fibonacci pattern that we call the crab pattern, which can also be similar to the Gartley pattern. So we see XA, and then, okay, the A to B, 61.8. For the crab pattern, does not have to be exactly 61.8, can be 50%, all right? So price goes to 61.8, the first pattern is Gartley pattern, the next pattern is crab pattern. Instead of the price stopping at 78.6, the price will go above, okay, the XA, and go to the level of 161% Fibonacci extension level of SA, which means, all right, traders are trying to force the price down here because they think the Gartley pattern is completed, but the price will just go up and continue to move up, even to the level of 161% Fibonacci extension level of SA. If you want to know more about Fibonacci extension, go to dayprotrader.com. All right. Now people will say, it's not Gartley pattern. Why is not Gartley pattern? So you were thinking first when you reach this level, you see it's a Gartley pattern. Yes, it was a Gartley pattern, but why are you selling? Is the company bearish? Is the company bullish? Is the fundamental solid? Are you just buying because you see on your chart a Gartley pattern? Well, what you can do, just put a line there and say, okay, it's Gartley pattern at this point only. So if it goes above that level, and the final support is no more Gartley pattern, all right? Sometimes the price will go above it only to come back down. If it goes above it and come back below it and retest it here, solid. That's better signal. But do not, what I'm saying here is that when the price reaches the 78.6% level, don't just click your finger and say, is, okay, going to go down now. The bearish Gartley pattern is completed. No. The price may find a support and continue to move up, even up to the 161%, forming, okay, changing the crab pattern, the Gartley pattern into a crab pattern. On the other hand, the same thing when we see a bullish Gartley pattern, price pull back to the 78.6% level. I understand that the smart money, very often you will see, yes, the smart money know about the bullish Gartley pattern, but they don't give a damn about it, so to speak. They will say, well, this stock is very bullish. The fundamentals are gorgeous. We want to buy and hold for a long time. Well, why do you want to buy it here, George? We would prefer to buy it at the best price. Don't buy it there, yes, but we prefer to buy it at the best price, the cheapest price, the lowest risk. So the price will instead display a double bottom pattern. Well, how do we handle that? Okay, draw your warning line and use the TSDWSYS008 like professional traders. Take the signal. If it's working, smile. If the signal fell, come out and follow the price. But the only thing that you need to be aware of as a trader, as a swing trader, you want to know when a Fibonacci pattern is completed, when the Gartley pattern is completed, whether it's a valid Gartley pattern or a false Gartley pattern. Have you seen, okay, a prior bullish move before the bearish Gartley pattern? How much, okay, the SA retracement in relation to the prior trend did the XA X to A has cancelled the prior bullish move? Well, if it did, don't be too excited about it, because it shouldn't. All right, distortion do take place, but if you see that, know that something did not add up. Do not ignore it. Okay, acknowledge it. But if you want to take part into it, don't say that it's completely invalid. But because there are sometimes distortion, just take it easy. But you want to know. That's what I'm saying. You want to know. All right. So swing traders will look for opportunity to buy during the formation of a bearish Gartley pattern at the point C for Charlie, provided that the point C is a valid support level and the fundamentals are solid. Don't use the technical alone. Do not use the technical alone when you are swing trading. Okay. They will look for opportunity to buy, at point C during the formation of a bearish Gartley pattern, though the pattern is bearish, but the pattern is not completed yet. They will look for opportunity to sell at the point D where the bearish Gartley pattern is completed. But remember, draw your warning line and check the fundamental. Never sell any stock without checking the fundamental. All right? Be aware of the smart money. We can push the price even to the top here before pulling back down, or the Gartley pattern may be changed completely into a crab pattern, which means price will break above the 70. You will see sometimes, then they will start selling, the price will ignore them, and then the price will go to 88.6%. People will say, now it's a bad pattern, because the bad pattern, which is another Fibonacci pattern, the target point is at 88.6% of the XA. But for the Gartley pattern, is 78.6. So when it goes above the 78.6, traders say, now, very often some traders, which is normal, they will sell at 78.6% and they will place their stop loss above the 88.6% level. Now, these traders have a deep pocket, and this is their trading method, which means it's suitable to their money management within their 5% money management rules, or whichever money management rule they are using, and they will do that all the time. Once they are taken out, they are taken out. They don't worry about it. Okay. Another group of traders also, for the bullish trade, as soon as the price reaches the 78.6%, they may buy straight away aggressively. I do not recommend that type of trading, but I know it's happening. You want to know, and they will place their stop loss below this 88.6% level, even below the X right here. But as a bullish Gartley pattern is developing, all over my tongue, it's developing, my apology to traders, all right, we can look for opportunity to sell at a point C for Charlie. Though it's a bullish pattern is being formed, it's not yet completed, all right. As the pattern is completed at the point D for Delta, all right, we'll look for opportunity to buy. We don't just buy. We'll wait for the TSTW, I'm getting hungry now. So we'll wait for the TSTW SYS 008 to give us a valid signal at the point D. The point D is a convergent point, either bullish Gartley pattern or bearish Gartley pattern. A bullish Gartley pattern can be extended into a bad pattern or a crab pattern. That's why we do not want to force it. But there is something else that can help us to know that this thing is going, there's a high chance, that we may have a Gartley pattern at this point in time. How do we know? We will use another, trading strategy, which is the zigzag pattern. Traders, I say to traders, if you are trading or you want to swing trade or remain in the market for a long time, you must learn the Elliott wave patterns, especially the corrective wave pattern. Learn what is a zigzag pattern. Referring you now to YouTube channel 24 Elliott Waves, all right, or our website 24elliottwave.com. the zigzag pattern, and the flat correction patterns. All right. So, okay, let me remove all my drawing here. This video is very important. I will run it. Okay, there are more things I'm going to say which I haven't said yet. So do not. If you want to pause the video, pause it, go and drink something, and come back again. But do not stop watching this video in the middle. Otherwise, you didn't get the whole picture. Let's continue. Breathing in, breathing out. Okay, myself, I'm getting hungry now, but I'll stay on until I finish this video because it's a very important video for swing trading. Ladies and gentlemen, waiting to remove all my drawings from my chart. I'll get there. Okay, too many drawings so far. I'll remove them one by one. I don't want to remove these spots which are important for me, for myself. So let's go back now to the real chart. Remove my drawing and we go back to the real chart. And this time we're going to analyze NVIDIA stock. Okay. If you use computers, well, you must know what NVIDIA, difficult name a little bit here. NVIDIA. Why they don't say NVIDIA? They just say NVIDIA. Maybe I'll send email to, okay, the CEO. All right. This is to, okay, help myself breathe in and breathe out a little bit. Let's continue with our discussion. Now, let's look at this stock, NVIDIA stock, and we're going to see what has happened here. I'm going to start drawing a line on the chart as I show my little boy how to analyze the chart. I said to him, just draw a line, okay? What the price did from A to B. And then I will say, okay, draw it from here to here, what the price did. He will say the price went up. So we're doing exactly that. From here to here, the price went up. Yes or no? Yes, it went up. Okay, from here to here, the price went down. Okay, so we want to compare. I will color this one now into pink to please the beautiful ladies. All right, so they don't say that we are sexist. We men, we are sexist, so we are not sexist. Okay, put a bit of pink instead of blue alone. So here we are. So there was a move to the downside. Okay, so we're starting with the blue line. Okay, though I'm talking like this, I'm very serious. Now, from the red spot to the pink spot right here, we see that the price went up, yes or no? Okay, it went up, okay? It went up all the way here. So, NVIDIA stock from 2003, okay, up to 2007, this stock was bullish. Great. Then we see a profit taking from 2007, near the end of 2007, up to 2009, beginning of 2009, okay, we have a bearish move. This is due to the, okay, the real estate crisis, the banking crisis, all right. So this is a profit taking. So the profit taking, we want to now measure whether we have 100%. Just looking at the chart, we know that it's not 100%. And the price went down a lot. It went down even up to 88.6% of the prior move, but it's not 100%. So, okay, because it's not 100% retracement, we can start thinking now about Fibonacci patterns. We don't know which one yet, but we just think of Fibonacci patterns, okay? So we're going to start drawing lines, use our Fibonacci retracement level. So we will label this one X, this point here. Okay, I'm going to put a spot there so you can see. So this point here, this is what we call X. This point here, we'll call it A. Okay, we are looking for B. Okay, so we don't know which Fibonacci pattern is going to form. If we have a butterfly pattern, we can have a retracement even up to the 78.6% Fibonacci retracement level of the XA. So we can see that from here, let's draw lines. From here to here, the price went up. Okay. The retracement from here to here in relation to the XA, I don't want to draw a line. I know it's at 38.6% level. 38.6% level. Any retracement below 50%, the first Fibonacci pattern that is coming to our mind is the bat pattern. All right? So there was a prior bullish trend. Then there was a profit taking, which we call XA. And then the price, there was a rally up, which we label now, this is AB, into the zone of 38.6%. It's below the 50% retracement level of the XA. The first pattern that is coming to our mind is the bat pattern. Okay? So, price went to this point, we say, okay, probably we're going to have a bat pattern. We don't know yet. So now the price pulling back. It's not a total retracement of the A to B. If we receive a signal at a point C, as I told you already, this is a point C. So this is X, A, B, C. I'm going to put the B also here. Are you with me? Okay, let's zoom into it a little bit so you can see everything clearly on your chart. Okay. All right. Okay. All right. So remember what we are looking at. There was a bullish trend, and then there was a profit taking. The profit taking was not 100%. We label this level X. We label this one A. Good. Then the price pull up to 38.2%. Now we know it's changing direction at 38.2%. The first pattern that is coming to our mind is the bad pattern. Okay. Though this video is about how to swing trade using the Gartley pattern. Do not forget that. We are still talking. All right. Then the price pull back, okay, between 38.2% and 88.6% of the A to B. All right. So we are thinking now probably we're going to have a bad pattern. At the point C right there, you can notice that traders bought this stock big time. You can see the tall candle here, how the price ran fast up this point here. Okay. All right. Let me remove this green spot and this one here. Look at the chart alone. Suppose you don't know anything about Gartley pattern or Fibonacci patterns. All right. So look at the trend line that I'm drawing on my chart. I'm going to extend it a little bit, okay, and leave it there, okay. The trend line that I've drawn now, I will color it into red, okay. And I also explain to you how I draw this trend line, this point and this point. There was a low and there was a higher low. When we see a higher low, what's the first thing that's coming into our mind? Try display a lower low followed by a higher low. We want to be bullish. Okay? A higher low is bullish. Okay? After a lower low. A higher low after a lower low is bullish. Alright? So we will look for opportunity to buy here. We will use the TSC WSY08 to enter the trade here. For swing trading purposes, we use TSC WSY08. Good. Price going up, our target is this one here. This point here, where the price did change direction, is a resistance level. Price went down. Okay. You can notice that if I use my Fibonacci drawing, something was going through the mind of traders. So traders say 38.2% retracement. Okay. And then people start buying here. When they were buying here, what's going to remind the trader will be thinking that the price will go to the target zone for a bad pattern. So a lot of traders that are buying at the point C, right here, will be expecting to take profit at 88.6% Fibonacci retracement level right here. The price did not go there. So instead of the price reaching the target zone, that's why I said to you, the price does not have to go to the target zone. Does not have to. The fundamentals, the market sentiment decide everything. The price will go down if the sentiment is bearish and the fundamentals are poor. All right? This is it. All right? So price did not reach the target zone to complete the bearish bad pattern. It didn't go to the 88.6%. In fact, okay, the price did stop at 61.8. So, in my view, you may disagree with me. That's okay. Though the stock did change direction here at okay, 38.2%, traders say no, we don't want to see. Traders prefer a retracement of 61.8 to the, okay, 38.2. Why? That's a very good question. If the stock is bullish, ladies and gentlemen, if the stock is bullish, all right, the retracement to 38.2 right here, all right, a lot of bear will see that as a sign of a sell signal because price went down fast and then the retracement 38.2. They want to sell. Why it couldn't even? It's below 50%. They want to sell. So as they were selling down, the price couldn't go and display a new lower low, confirming to us that the bearish momentum that has started here at the point B is diminishing at this point here when the price displays a higher low. The price going up. Now as the price going up, it goes above the 38.2. Fibonacci traders, again, are thinking of the Gartley pattern. You see the picture now. So traders say, one group of traders say, okay, there was a bullish trend, a profit taking, not 100%. Okay, price pull back to 38.2 and then pull back to C. They are buying. They think it's going to be a bad pattern, expecting to take profit at 88.6%. Now, as the price approaching 60, when above the 38.2, above the 50%, when it goes above 50%, it's bullish. So what we will do, we can draw a warning line at 50%, which is a psychological price level, dividing the price into two zones. We will watch it. If it goes above the 50% and goes back below it and find a resistance, it's a sell. Let me say this again. If it goes above the 50% retracement level and goes back below it and find a resistance, it's a sell. We will sell. Now, if it goes down below the 50% level and goes back above it, it's a buy. We will buy. Okay? So look, are you with me? I'm talking slowly to get your attention now. All right? So now the price went above the 50% level, which I'm going to color now into orange. 50% of the XA. Look what's happened. The price went above it a little bit, okay? And then went back below it. Look what's happened. He tried, can you see it on the chart? Come back here, all right? Now, you see, it went above it. I want to zoom it. Okay, all right. The price went above the 50% level, and then look, try to come back. He went above it and then went back down. Don't chase it. Wait patiently. The small money, like the professional, like orderly market. Remember, the professional always like orderly market. It did below the 50%. Now they say rally, near, boom, sell, down. Okay. Let's continue with my discussion. This is just to highlight that point to you because it's important. Now, as the price is going up to the target zone of 80, supposed to be a target zone at 88.6% to complete, the bearish bad pattern for NVIDIA stock. As the price approaching the 61.8%, another group of Fibonacci traders are thinking of the Gartley pattern. They say, I told you before that this is not a bad pattern, that is going to be a Gartley pattern. This group of traders will look for opportunity to sell at 61.8. So what has happened here, we can cover it. It's like it did not happen. So let's cover it, okay? It's like it did not happen, okay? Are you with me? Are you following me? Okay? It's like it did not happen, all right? So we will say, all right? Now we will say, at this point in time, as the price went to 61.8 of the SA and now found a resistance and went back below the 50% and retested here and going back down, we will say, all right, it's not going to be, okay, a bad pattern. It's first either a Gartley pattern or second, a crab pattern, maybe. So we will say, okay, there was a trend, there was a profit taking, not 100%, and then the price rally up to the 61.8. Exactly. The first pattern that's coming to our mind is the Gartley pattern. Okay, so you see now I cover a part of the chart is to so that you can follow me. So our drawing, I will remove some line now. Our drawing will be, I will remove this one also. Okay, will be something like this. So we will say NVIDIA. We know what you are trying to do. Okay, so here it is. It's going to be, okay, either a Gartley pattern, number one, a Gartley pattern, or, okay, a crab pattern. Alright, so we will say that the price came from this point onward, after it pulled back, you see pull back first, to the turquoise horizontal line, which is a great support level, you see. You see the turquoise horizontal line on your chart, can you see? The turquoise line. You see here the price changing direction. This is a hotspot trading zone. You want to know about hotspot trading zone, go to stochasticmarket.com. See? It's a resistance level. Okay? That has been validated as a support level. Price went above it. Okay? Now again, you see here the same turquoise line. pull back to retest, excellent support, price went up. Now, as the price went to the 61.8, was pulling back, okay, can you see? It pulled back to that turquoise support level. That's what I'm saying to you. Whenever you want to buy at a point C, you want to make sure that you are buying, okay, around a support level, a valid support level. So it was not a bad decision. Trader bought it here. On this monthly chart, the price went up a little bit, but was not straight. It was ups and down. It happened if you are swing trading. This is something that some traders find difficult to understand. They think that whenever you buy, the price must go up. Sometimes it doesn't go up. It will go blah, 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 choppy, 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 and then boom, up. All right? Sometimes people get taken out before the move starts. There's nothing you can do about it, okay? Right? 5% money management rules. And see whether the signal has failed or not. There's nothing you can do about it. Choppy market do happen, blah, 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 blah. You see here? Didn't go up straight away. But it was a good place to buy. And price, you see, 1 month up, 2nd month up, 3rd month down, 4th month, a little bit bullish, 3rd month, you see, 5th month again, went up all the way there, and then come back down, and then blah, 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 and then come back down, okay? So at the point C, all right, now we are at the point C for this stock. So what's going to happen now? Okay, we are still there now. The stock is now at 1556. I believe this stock is bullish. That's my personal view. You do not have to buy and hold. I did not say to you to buy and hold. If you're going to buy and hold, it's your own decision, your own responsibility. All right. So remember that. Take a valid signal and follow the price. Okay. I'm talking like this so that traders, okay, understand. Okay. All right. So now, at this point in time, we can see that it's not a bad pattern that we are expecting because the price couldn't reach the target zone of 88.6%. The price will rally up to 61.8. Okay. Now, the first thing that's coming to our mind as a swing trader that understand the Gartley pattern, we will expect this stock, okay, at this point onward to find a support if provided that the fundamentals are solid. What are the competitors for NVIDIA? What are the products for NVIDIA? What is the market for NVIDIA? Okay, what's going on? Compare the short-term debt to the current liability. This is the acid test. Check the economy news relating to NVIDIA. Okay, so we are expecting NVIDIA to form a bearish Gartley pattern. But as I explained to you, though the pattern is developing, we can look for opportunity to buy at the point C for swing trading purposes. If we are already in this trade, as some traders are, the first target is, okay, the point B for Bravo right here at the level of, okay, 26.26. The market can change the dynamics of this stock. This is talking about the trading triangle. If the S&P 500 start going down, NVIDIA will find it very difficult to climb the ladder, all right? The S&P 500 or the Nasdaq 100 continue to go up. That's good news for NVIDIA. If the market leaders for the Nasdaq 100, Google and Apple continue their bullish progression, that's a good news for NVIDIA also. This is about the trading triangle. If we are already in this trade, we are managing it, okay? So we don't end up losing, all right? For swing trading, it requires more experience, more practice. Use a demo account. Know your setup. As I'm showing you here, a setup of a Gartley pattern. How do we use a Gartley pattern for swing trading? We are looking for opportunity to buy at the point C when a bearish Gartley pattern is developing. We are looking for opportunity to sell swing trading, okay, at the point C when a bullish Gartley pattern is being formed. We will look for opportunity to sell when the bearish Gartley pattern is completed. We will look for opportunity to buy when a bullish Gartley pattern, okay, is completed. Here, a bearish Gartley pattern is being developed. The point is still hanging around the point C. Okay, the point C, the support level here is at what? The support level here is at $13. The price now $15.56. Well, it's up to you what you are doing. We have seen a higher low where I cover the price here, and the price still hanging around that level. We will check the fundamental of Google Finance, Yahoo Finance, okay, and we will take a value signal using the TSTW S08 trading system. All right, a multiple time frame trading system, okay, will assist traders after they have identified a value setup to make excellent trading or investment decision. Let's see how long we have been recording this video now, and we will continue because I have not finished yet discussing and analyzing this NVIDIA stock. I've been talking to you now for 49 minutes. Thank you for watching, and I will continue because I have not yet finished. Let's continue this discussion. All right, ladies and gentlemen, as I'm telling you now, we have seen that, okay, a bearish Gartley pattern is developing. We don't know whether the pattern will be completed or not, or the pattern, okay, will fail. The pattern will fail if the price return back below, okay, the point A right here, all right? If the fundamentals are weak, if we see some bad news related to NVIDIA stock, or the NVIDIA has failed to meet analyst forecast, the stock may come back down completely. If the fundamentals are poor, it may come back down, and from C, the price will go down more, which means we will have to analyze again, okay, what is likely to take place. But right now, as things stands, okay, there is a bearish Gartley pattern that's developing. Doesn't mean that the stock is bearish. The stock is bullish. Right now at the point C, there's a high chance from this level of 1556 that the price may go to the level of $26 minimum target. That remains to be seen. Okay, as I said to you, the fundamental and the market sentiment decide whether the price will go up or go down. All right, the general market will influence this individual stock. Now that we are here, suppose we receive a signal here, and we are thinking that the price, our first target is, okay, the NAT, which is right here, which are $26. The completion of the bearish Gartley pattern is, I'm going to put a line there, this level here, at 78.6% Fibonacci retracement level of the XA. This video is about how to use, okay, a Gartley pattern, how to swing trade using the Gartley pattern. Okay, so the ultimate target for the development or the formation of this bearish Gartley pattern, though we are bullish at the point C, if the bullish trade is successful, our ultimate target for the bullish target price is at $31, $31.43. All right, that's, I'm going to put a line there, and I will color it. I'm running out of option now. Color it in red. Okay, right there. Okay. All right, $31. So first target 26, second target, okay, 31. How long it will take for the price to reach the target? We don't know. It may take a year, it may take 2 months, it may take 1 day, boom, gap up. It may take 3 months, it may take 1 year. We don't know. All right. Will the price definitely reach the target level? Maybe. There's a high chance that it may reach the target if the fundamentals are solid. So as the bearish pattern is being formed, though it's not yet completed, and we are buying at point C, if the stock have excellent fundamental, maybe below its book price, its net asset price is cheap, okay, is excellent, has a higher return on capital, okay, higher earning yield, the stock is excellent, it's also excellent stock at a low price, there's a high chance that it may go up, provided that the macroeconomy is okay, viable. Okay. Now the stock is going up. Okay. So some trader will try to take profit, acknowledge this resistance here. Okay. Myself, I will take profit right here like this. Okay. And wait for it to close. It goes above the orange line. Find the support again. I will enter again. And then take the next target at 31.2, step by step, using the TSTWS or S008 trading system or a multiple time frame trading system. Price reaches the point D for delta, the bearish Gartley pattern is completed. Will the price go down? If NVIDIA fundamentals are solid, if they are making a lot of money, if their future prospect is solid, the price will not go down, it will go up. So the next thing trader will be thinking of butterfly pattern. They say, okay, butterfly pattern will usually end, though it doesn't verify the criteria of butterfly properly. They may say, okay, butterfly usually tend to finish at 88.6%. So some traders will sell at 78.6 and place their stop loss above the 88.6%. And what are called the dangerous traders know that. So price will go up, take them out. Those sellers that place their orders here, their orders be filled and even being taken out. And the price continue up, continue to move to the upside because the fundamentals are solid and the future prospect, the long-term view for this stock is, okay, I move some lines now, is bullish if provided the fundamentals are sound, and the stock is going up, and people say now, oh, it's not a Gartley pattern, it's not a bad pattern, and it's going to be, okay, a crap pattern, so the target will be extended to the level of $60, which is 161% Fibonacci extension level of the SA. Remember, whenever we are using Fibonacci ratio or Fibonacci retracement, we must not force it. We must take a value signal, and as the price approaching a key Fibonacci level, we must acknowledge it and use it for profit taking and also for managing the trade or securing our gain. The next thing I will say before I close this video, thank you for watching. All right, the next thing I will say to traders also about this powerful pattern, the Gartley pattern. I will put my drawing again on the chart very fast, okay? And I'm going to explain few things for traders that are not discussed, okay, on the internet here, okay? I will select only, okay, the bearish Gartley pattern, okay? I will also put here the initial bullish move, which I will color again in turquoise. All right, okay. So there was an initial bullish move, and this is X, this is A. This is a profit taking which did not cancel the prior bullish move. Okay. Now we have A, B, C, D. The prior reaching the 78.6% of the XA. At this point in time, traders want to sell. There are a few things that I promise that I will tell you that will help you to know whether the price has a high chance to go down here. The one thing that trader can use is to analyze the internal wave of XA in relation to the initial okay, trend. This is just to direct traders' attention to the zigzag Elliott wave pattern. I will not go deeply into the zigzag, okay, Elliott wave pattern in this video, but I will refer traders back to our YouTube channel, YouTube/24ElliottWave.com. Subscribe to 24ElliottWave, subscribe to dayprotrader.com, subscribe to Joe Trio if you want to know what we are doing, okay? We will analyze the internal wave of the XA. The internal wave of the SA will tell us whether there's a high chance that this move from here, when the pattern is completed, that the Gartley pattern has a high chance to go back down. The next things that can also assist traders to avoid, okay, entering the market and losing is to check the fundamental. Nothing can replace fundamental analysis. All right? All right? So at this point in time, you may check, for instance, what's happening to NVIDIA. We see a bearish pattern that is completed. Is the stock bearish? Very often, let me tell you this, before a stock goes down, the stock goes up first. They are bullish, everybody's happy to buy, and at one point, the bullish momentum is diminishing or is dissipating. People want to sell, or people want to take profit, or people do not believe that the stock should go up more, or the stock is overbought compared to the book value. If the stock is 5 times the book value, more than 10 times the book value, and this is very important. I need to say this is very important for traders. It's not because the stock is 10 times its book value that the stock is overbought. The stock is overbought if it's more than 5 times its book value. If the company is not innovating, is crashing under competition, and is not making money. So the investor will not buy because they don't believe that in the long run, they don't have enough money on their balance sheet, like Google or like Apple stock, that have a loads of money sitting on their balance sheet, Microsoft, a lot of cash on their balance sheet to buy other company in case the competition is too much, All right, you want to analyze that. Because if they have a lot of money sitting, as they say, sitting on their balance sheet, like Apple, like Google, like Microsoft, our investors say, okay, they will pay dividend, all right? And they can also buy their competitors and take them out of the market, which means they buy their customer, they buy the more share of the market. If they are losing market share, they are able to buy another company to increase their market share. So what I'm saying to you here, at the point D for Delta, all right, though a lot of technical traders will be itching to sell because they see a bearish pattern, or will be itching to buy because they see the completion of a bullish Gartley pattern, what I'm saying to you is to go back to the book to check the fundamentals, and this will help you to know whether you should sell or buy, or whether you will have a breakout. My approach is very simple. Price reaches a target zone. Very often, sometimes the price will shy away from the target level. But if it reaches the target level, take profit. Go and celebrate for a while and come back with that you find support above the target level. Then game on again. Don't sell it. If you break above a resistance level and find support, don't force it. If you receive a buy signal, take it, but gently. The next target will be, okay, the point X for X-ray. It reaches the X for X-ray target level. After breaking above the Gartley target, the Gartley level of 78.6% level, reaches X level, take profit. Go away again, come back again, allow it to find the support again at above X. Okay, if it's going to form a crab pattern, a Fibonacci crab pattern, so you are thinking now it's going to go to 161% extension level. That's what George said. Okay, so if you believe that, allow it to break. If it's bullish, it should break a resistance level. If it's bearish, it will dip below support level. That's how we know that it's getting bearish. If the price breaking resistance level, dynamic bullish stock will break resistance level. Dynamic bearish stock will break support level. So we just wait. It break above a major support level. The market know, the professional know, the hedge fund knows, the banks know that it break above a support level. They are all itching to buy, provided that its fundamentals are solid. If the stock is overbought, 10 times the book value, and is okay, making money, and it's not a reason to sell it. All right? Okay. I think I've said enough today, and I've been speaking to you now for some time, and I hope you find this video also useful. If you want more material about Fibonacci pattern, check our Day Pro Trader YouTube channel. If you want more trading material about free trading material about Elliott Wave, check our 24 Elliott Wave channel on YouTube. And do not hesitate to visit our normal website. Check the links below this video. And continue to learn and to improve. Okay? For swing trading, before I close this video, I say to traders that swing trading requires more experience. A TSTWSY is 008 for swing trading. One must always, okay, start checking first the market. What's happening to the market? And then go and check the sector. What's happening to that sector? Is the sector bullish? If the sector is bullish, we want to be bullish. Okay. Is the sector at a cycle point? Okay. Is the sector being bullish, and now it's at the end of the cycle, bullish cycle? You don't want to buy. It can be bullish, but you don't want to buy at the end of the cycle. All right. You don't want to buy at the end of the bullish cycle. Though it's bullish, but you don't want to buy at the end of the bullish cycle. If it's bearish, you don't want to buy. You want to sell. You don't want to sell at the end of the bearish cycle. You want to buy instead. So it's not because the stock is bearish that we just buy. We want to know where is the stock in relation to the cycle. The next thing, after verifying the market, the sector, we must now zoom into the stock itself. All right. Check the balance sheet. Go to Google Finance, Yahoo Finance. We are satisfied. Do not limit yourself, okay, to the financial statement, which means okay, the ratio, the return on capital, the earning yield, the profit, the net asset price. Do not limit yourself to that. Just play a little bit of mind game. For instance, who are the traders trading this stock? Okay, what is their products? What is the product they are selling? Okay, play a little bit of game. Who are the people using this product? Okay, honestly, How many people are still willing to buy that product? Okay, are they innovating? Okay, how are they coping with the company? Just ask those little questions. Write them on a piece of paper. Do your own verification and just and see whether you are happy about the future of this company. Once you are happy, okay, you know that the market, market is viable now. Okay, the market is at support level. Everything lying nicely. Okay. We go back to, our trading tool, and we take signal. We enter the trade, we manage the trade, okay? All right? Every day is different. You have to see that this stock, it went up from 2003 to 2007, but it's not in straight line. Some month, the stock went down, okay? So you want to know where and when, to buy. Though it was bullish, if you buy here, you see, the price went down instead. So you say, oh, I thought it's going to go up, now it went down. Okay? So if you sell it, somewhere here, you say, oh, I thought it's going to go down. Now it went up. But you want to know where and when, to buy. Also, because we are coming to the end of the year, I want to talk to traders like my friends. You have been with me in the whole year. Okay? And I thank you for your support, but nothing can replace you, okay? You are the decision maker, and you will always make that decision. Give it a time, keep learning, keep improving. Do not repeat the same mistake. Thank you for watching, and we will speak to you very soon. We are the TSTWSYS 008 traders. This is about how to swing trade using the Fibonacci Gartley pattern.